What's going on, my lovers? Welcome back. So, decided to make another IBM video because I just saw that the CEO, Arvind Krishna, was on Mad Money last night. So first, let's play the interview for you all and give you my take on it, and then we'll get into a little bit about IBM, what you can expect here. But first of all, we need to address the elephant in the room here. Jim Cramer's starting his CNBC Investing Club. The investment club already exists. I would like my royalty, please.
Well, you know I am a big fan of Red Hat, and one of the reasons I am is because in your presentation, you start talking about, I tell you, this is a new IBM, about your hyperscale partnerships, expanded partnerships with Microsoft and Amazon. Candidly, Arvind, the old IBM would not mention those two companies. They are your partners. You work together. That, to me, says high growth all the way around. Congratulations on breaking the mold and recognizing you must partner with these guys in order to be able to please your clients.
We have to. Look, IBM has made a long history out of working with whoever has got a strong footprint at our clients. If you think back to even the mainframe, Jim, that was almost 50, 60 years ago. It really was a way to create an ecosystem of other hardware providers. You go back to e-business. Under Lou Gerstner, we really brought together with services all kinds of technologies that our clients needed, hardware, software, and in some cases, other business consulting partners like EY, as we mentioned here. But you got to recognize Microsoft and Amazon are going to be there. Let's add value to them as they bring value to us, and that becomes a flywheel of growth.
Well, look, I've got to tell you, when I think about the hybrid cloud opportunity, to me, it is your largest. And I was always hoping that Red Hat would not be a bolt-on. I was hoping that it would be the gateway. I think that if you talk about the hybrid cloud opportunity for IBM, people understand why you can have those targets and the targets aren't fanciful.
Yeah, so we make Red Hat at the heart of our platform-centric strategy. So as you call about the hybrid cloud platform, the heart of that platform is Red Hat. But for every client who wants, then there's another $3 to $5 of software that you get there. So you do the math. Maybe 30% of the clients, if they do that, then you get that share of that. There is a services opportunity, but services also brings in our partners, be it SAP, be it Salesforce, Adobe, etc. With software partnerships like Box and Palantir, amongst many others. So this ecosystem helps bring more revenue in, but through the platform and the multiplier effect, we get a lot more revenue. That's why we feel so comfortable about this. And as you pointed out, Jim, there's so many opportunities, be it around automation or a data fabric that goes across multiple clouds, again, playing to the hybrid theme that Red Hat brought to us. And in cybersecurity, which as we've talked about before, there's so much opportunity because of the sheer threat that the bad actors are bringing all of our clients.
So definitely a lot to unpack here. And I'm just taking some notes here as I was watching, but lots of good things here. Thinking about IBM in partnership with these companies like Amazon Web Services and with Microsoft. So you think about it here, a lot of people say, well, IBM's never going to catch up. Their cloud market share is too small. It's already dominated by the likes of Amazon and Microsoft, Google, Alibaba. What the CEO is saying here is it doesn't have to be an all or nothing game here. They're going to partner with these companies and they can add value in other places. So IBM can add its own value through these strategic partnerships. And with each partnership, it's more revenue for the company. So another thing Krishna, IBM CEO, went on to talk about was that he's predicting that IBM will be able to, over the next few years, grow its cash flows as well as grow its revenue. So that's something you don't often see, a growth company that's also growing its cash flows. And that's kind of the best of both worlds. You know, that's exactly what you want to see here. And if they're able to do that, they're talking $30 billion of free cash flow over the next 3 years. Now, if they could grow, even 10% each year, that would be huge. So there's definitely something to continue monitoring, and I'll be covering their next quarter report. Now, they report earnings on October 20, so I'll definitely be paying attention to that and covering it on the channel here. So if you're interested in, hearing how that goes and how the IBM story continues to unfold, definitely don't forget to subscribe to the channel so that you don't miss out on future videos. There's a lot going on. We've got the Kyndryl spinoff coming up. If they're able to execute the way Krishna has been saying, and it is interesting to see that IBM stock year to date is up 15%. Over the past year, it's up 17%. But it has been largely flat. And, if you believe in the company, this is definitely a great entry point. If we just take a quick look at their Q2 earnings, which I've covered on the channel here, this was back in July. they brought in $18 billion of revenue, $11 billion of free cash flow. Their revenue year over year was flat, but their cloud revenue was up 9%. So if all things stay constant, then when IBM spins off and it becomes primarily a cloud business, then it should have no problem getting back to a growth story, because they'll be able to put their full focus on the growing high margin businesses like cloud, like AI. Now, the plan with the spin-off is to spin off the legacy businesses that are less profitable, and that way the new and improved IBM would be primarily focused on this cloud here. So if they continue growing 9-10% a year while bringing in all this free cash flow, I mean, it's a great recipe for success. So if there's a company you're interested in, if it's a company that you think has some promise, this is definitely a great entry point here. $130 range for the stock price. It's really gone nowhere in the last decade, and that's because it was mismanaged. It was led by MBAs who are too focused on short-term profits and, giving money back to shareholders, and not enough on innovating. But since Krishna took over, he's starting to take this company in the right direction. It's not going to happen overnight. This is a long-term play here, but I am excited. I think he gave a lot of good insight in his interview, because that's another thing so many people have said. There's no way IBM can catch up to the likes of Microsoft and Amazon. They already have too much of the cloud market share, but IBM doesn't have to. They can do their own thing. They can partner with these companies and bring in other tools and specialties that they may not have. And this will add value to the customers and obviously add revenue to IBM's bottom line. So if you enjoyed the video, please don't forget to like and subscribe. Drop me a comment below if you have any questions, and stay tuned. We'll be covering the IBM quarterly report and following the story as it develops. This is Vinny from the Investment Club, and I'll see you next time.